You're likely here to learn why I've increased my stake in Ethzilla to just under 3%. In this video, I'll go over why I urged the company to sell Ethereum to buy back shares and the company's landmark decision to act on this idea. If you don't know what Ethzilla is, I suggest you watch one of the other videos on this channel to get a better understanding of their business. As all of you remember, Ethzilla had 102,000 Ethereums, worth roughly $420 million, and near $570 million in cash. This adds up to roughly $62 per share in assets. Now, the company also owed $32 per share on a combination of convertible debt, prepaid warrants, and an OTC loan. This adds up to 62 minus 32 equal roughly $30 per share in net asset value. On top of this, the company has a tokenization business, which is very real. The $500 million that are raised on the convertible note and sitting in the cash account earning interest in treasuries is, as per all of the company's hints in press releases and can clearly be seen, the balance that is aimed to be tokenized. Another part of this real business is the part ownership of Liquidity.io, a key component of this thesis. And Liquidity.io is a platform that already has SEC approvals and registrations and the technical capacity to launch those tokens immediately without the need for further approval. To understand better this part of the business, think of a USDT coin. It is worth only $1, and the only way for you to generate a yield on it is if you invest it somewhere. But it gains no value on its own. Now imagine a USDT coin that generates a yield and grows in value similarly to a treasury only by you holding it, but is still tied to the dollar. That is essentially close to what Ethzilla is aiming to do by tokenizing private credit, since it is also linked to a dollar-denominated instrument, but that actually has a yield to it and not a flat value. Now, also keep in mind that Circle, the issuer of USDC, trades at 156 times earnings and a $30 billion market cap. Now, if you were to assume simply a 2% yield on the tokens issued, a 2% yield is even probably less than what Ethzilla is currently making by putting this 500 million in treasuries. But this by Circle's multiplier would value Ethzilla's tokenization business at roughly $1.6 billion and $100 per share. Now, such a valuation for the tokenization business in my mind is insane and too high. However, I believe that as it grows, it could be valued by itself at roughly $30 per share. Regardless, the tokenization business is currently valued at zero, since it actually trades at a discount to the cash balance it has, let alone valuing this business. Now, in an open letter to the company's management yesterday, I urged management to sell part of its Ethereum to start buying back shares while the stock traded below its net asset value. This would achieve the following. For every share bought at a discount, the discount would be distributed to existing shareholders' net asset value per share. To simplify, at $21 per share, with a net asset value of roughly 30, implying a discount of $9, for every 100,000 shares bought back, every share's net asset value would increase by roughly 6 cents. In my opinion, this was an immediate way to increase shareholder value, especially since every buyback would also increase every share's ownership of the tokenization business, which, despite now having a value in the market of zero, is far from actually being valued correctly. Now, happy to say that in the landmark move that became the first of its kind for Ethereum digital asset treasuries, Ethzilla announced it was moving ahead with a sale of Ethereum to buy back shares. In fact, it had already even started acting on this by selling for $42 million worth of Ethereum, so roughly 10,300 ETHs, and has already deployed $12 million of that, buying back 600,000 shares at roughly $20 per share. This has already increased the net asset value per share by roughly 40 cents per share, which is very material for a one-day return. However, most importantly in this announcement, Ethzilla had said it will continue to sell Ethereum and buy back shares until its net asset value normalizes, which means until its net asset value reaches 1. What does this actually mean? Since Ethzilla's buyback program was already authorized by shareholders for $250 million, and 60% of the company is owned by long-term large shareholders, only 40% of the shares are effectively in circulation. Now, those 40% at the current $21 price are worth under $150 million, which is less than 250. This means that Ethzilla will eventually, in a matter of days, buy up all shares trading under net asset value, which will, to start, increase the net asset value as it does that with every purchase, but also ultimately get the stock price to at least net asset value just by the management and the company's actions. This is an absolutely brilliant move by management, which shows not only that they listen to shareholders and have their best interests in mind, it is also the first digital asset treasury to take such an active approach to grow net asset value per share for shareholders. Another example of how Ethzilla is better than other digital asset treasuries in generating a growth of ETH per share for its shareholders, other than it investing it at a higher API than other digital asset treasuries, which I covered in my previous videos. It also effectively removes any doubt if Ethzilla will get back to net asset value by earnings. And this is significant. As a show of trust in management's decision and clearly understanding now that Ethzilla is even more undervalued than I previously thought, I've purchased another 80,000 shares of Ethzilla, taking my ownership to just under 3% of the company. Whereas this stock will now quickly reach a rising net asset value per share in a matter of days, more interestingly, its earnings has likely more in store for it to push through well above net asset value. In a previous video detailing the technical reasons why Ethzilla is undervalued, I had explained these would be resolved by an earnings filing, which is on November 14th. If you haven't watched this video, you can do so on the channel. These earnings alone, as well as updates on its tokenization business and a clear guidance, which the CEO had previously said would be released in earnings, are enough to push the stock combined with the buyback efforts above net asset value. Since its token business is currently worth zero, it is a very clear expectation and deduction from the current events that the stock will start trading at the net asset value, since all shares below will have effectively been bought back by management, plus the valuation of its tokenization business, which is therefore above net asset value and above $31 per share. Now, this number is very significant. And here's why. Monday morning, Liquidity.io, which is partly owned by Ethzilla, and this is important, published a LinkedIn post entitled "What Happened to Ethzilla?" In this post, it blamed Ethzilla's depressed stock price on a short seller hedge fund that was part of its convertible note raise. According to Liquidity, one of the funds that invested $350 million in the convertible note simultaneously sold call options in the $30 to $40 range and took a large short position on Ethzilla. Now, looking on NASDAQ data, you can clearly see that at around the same time of that convertible note, a large short position of 1.5 million shares post-reverse split, or roughly 10% of the company, was in fact opened. Looking at option chains, you can also see that roughly 3.2 million call options were sold in around the $30 mark post-reverse split, which is also representing about 20% of the company's shares. To simplify, it means that when the stock reaches $30.50 per share, under which the company will itself buy stock, and so we know that this is coming, and it later publishes earnings and gets a valuation on its tokenization business and adds that into the share price, essentially. These funds will convert the convertible note into equity. Once this happens, existing shareholders get a 5% premium of that amount added to their net asset value per share, since the conversion price is 5% above net asset value, essentially. To be precise, $30.50, meaning an increase of roughly $1.5 per share to net asset value for other shareholders. However, as Liquidity says, and as a reminder, Liquidity is partly owned by Ethzilla, in their publication, and what they are saying means that one of these funds sold call options at a level between 30, at levels between 30 and 40, and at the same time opened a short position. They then imply that a sufficient rise in the stock price would force the fund to close a supposedly net short position. Now, it is impossible to verify that this position is actually net short, since a lot of these short positions often occur off exchange, which is in another way called dark pools. However, if this is true that one of those funds indeed has, as per Liquidity is saying, a net short position, then it means that once they convert the shares, they convert the notes into shares, their call options get called almost at the same time, meaning those shares get transferred for the $30 per share price that they sold them at, and they are left with having to close their short positions by buying, in this case, shares in the market, if that is actually true. Now, the size of this fund's short position, if it were to actually be closed in the market, is roughly 10% of shares. Now, since, as you know, currently only 40% of shares are being traded and in free circulation, since the remainder is owned by long-term holders, it means that this fund, if that is the size of its short position, with net short position, which might be smaller, would need to buy at the maximum 1 out of 4 shares in circulation to close their short position. So If that is indeed the size of their short position, then this could trigger an additional technical factor in the growth of this stock, which would be close to a short squeeze, given that they would need to buy back shares. However, we can't really appreciate the magnitude of this as we are unable to completely measure at this time how much is the actual net short position, since it might be effectively neutral. We don't know that. However, we do know that liquidity, which is partly owned by Ethzilla, is saying exactly that. So for anyone that wants to check this, you can look at their post on LinkedIn. And this is something that is worth keeping in mind as we go above net asset value. And if this is actually true, we might see a sharp rise above net asset value. However, that remains unconfirmed, but that is still material information if you are an Ethzilla shareholder, given the company that has published this. So if you are to remember anything from this video, Ethzilla, at its current share price of $21 per share, is trading roughly at a 30% discount to its net asset value. The company, in responding to the open letter, has confirmed it will buy back all shares below net asset value in a program that is fully funded, and the size of this program is larger than all shares available. So we ultimately know that the stock will soon reach net asset value per share, with each buyback until then growing the net asset value per share, as I've previously explained. Earnings are coming in 2 weeks, which will fix most valuation errors that investors made on this business. And the launch of its tokenization business and more aspects on it, which would be added to the valuation of the company and increased from a level of 0, is also likely to push through the valuation above net asset value. Now, then you have to remember the information published by Liquidity and assess whether you believe that to be true or not, and whether the net short position is actually there. But this will become obvious based on the price action once the stock price goes above net asset value per share, which is a matter of days or weeks. For all of these reasons, I've increased my position by 80,000 shares to just under 3% of the company. In closing, I wanted to thank management for the swift response to my appeal on the buybacks. This really shows the dedication to creating lasting shareholder value and maximizing shareholder interests. It was a brilliant move with an incredible speed of execution that I'm sure will shortly translate into the stock price and really raises not only my confidence, but I'm sure the investment communities in the management's leadership and its ability to deliver on the tokenization business and maximize shareholder value going forward. Thank you.